Have you ever wanted to invest in real estate in the United States? Well, in this video, I'll be sharing with you how you can invest in US real estate without actually owning and operating a property. There's a couple of big ways you can do this. One is by investing in crowdfunding real estate and the other is by investing in REITs. And we're also going to be talking about how you can make money investing in REITs. A REIT is a real investment property trust, and this is pretty much where you are investing in a company that is going out and investing in real estate properties. You can buy and sell REITs whenever you want on the stock market. Reason why a lot of people love real estate is because it is attractive for a predictable passive income. You buy a property, and to keep things simple, let's say you buy a house for $100,000. Then someone moved into that house, which is a tenant, and now that tenant is going to be paying you $1,000 every month for living in your house. But buying, owning and operating your own property can be a little bit more extensive than that. You have to have access to the cash and you will need pretty much a team built around it. So it's pretty much involved, and this is where REITs come in handy because you can invest in a REIT, which is a company now that is going to go and buy all those nice properties and make money by collecting a rent. The cool thing about REIT is that they are required by law to pay out 90% of their taxable income to you, the shareholders, through dividends. REITs make money by buying real estate properties and then leasing them out to other people. That way they can generate income by collecting rent. So now that they collect this rental money, pay their bills, they take the 90% of whatever is left over and they pay most of it to their shareholders through dividends. So now instead of you going out and collecting rent from tenants, you're now investing in a company that is going to manage all the properties and do all the work for you. And the sweet part is, they're going to pay you a great share of their profits. REITs are a popular way for you to invest your money if your goal is to achieve passive income. This is because REITs tend to pay much higher dividends than regular stocks. Some REITs even have a dividend yield of 10%. That means if you invest $1,000, you'll be getting back $100 through dividends. If you want to see how big of a dividend a REIT or stock is paying, you can simply use a stock analyst website, or my favorite place is Yahoo Finance. So you really go about buying REITs in the United States is that you need to open a brokerage account that accepts international clients. Two excellent options are TD Ameritrade and Interactive Brokers. To see a complete step-by-step on how you can purchase REITs in the United States, you can definitely watch my video on how to purchase stocks in the United States from the Caribbean. Remember, REITs are no different from stocks in terms of how you go about purchasing them. So the same step that you use to purchase a stock, that is, you search for the REIT you want to invest in, specify how much shares you want, and then you buy that REIT. You can simply start by googling best REITs to invest in. That's a basic place to start. So let's take a look at how much money you can really make from investing in REITs. For this example, we'll be using a company called Realty Income Corporation. The ticker symbol is O, which as of making this video has a current dividend yield of 4.08% with an annualized amount of $2.82.26 per share. As of making this video on July 17, 2021, the current price of Realty Corp is $69.5 per share. Let's say we have an investor who has $25,000 and wants to generate some passive income without going into debt. So he decided to invest all of it in Realty Corp. He was able to purchase 359 shares with his $25,000. Our investor will now be getting a monthly dividend payment of $85 per share. Now, you might be saying, wow, just $85, that's a little bit. Well, here's where things really get interesting. Since going public in 1994, Realty Corp Income has produced a phenomenal shareholder returns of 15.2% compounded annually. Now, the average duration for a mortgage term is 30 years. So we're going to assume the investor will stay invested for 30 years. To make things simple, we are also going to assume the following. The investor reinvests $85 monthly and the annual growth rate of the company continues at approximately 15% for the next 30 years. After 30 years, if the investor does not invest another penny, he will have over $2 million in assets. And bear in mind, he is not managing a property, he wasn't in debt, and what he invested in most cases would be the initial down payment for a house. So it's all about doing your research and doing investor comparison with real estate and see which one is really best for you. If you have made it this far in this video and you're thinking to yourself, man, I really want to invest in REITs but I don't trust myself to do the research, or I don't know how to research, then you may consider investing in a REIT ETF. So VNQ is an ETF that invests in REITs. So if you now go out and buy shares in VNQ, you will have exposure to over 180 different REITs. So REITs are really a good way to get exposure to the real estate market without having to actually manage and operate your own real estate investment properties. Unlike real estate, REITs allow you to access your money whenever you want. That's it for now. Thank you for watching.